Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Allie Canal. Let's get to the 3 things you need to know today. First up, U.S. stock futures holding steady as investors await Nvidia earnings. The world's most valuable company out with results after the bell. Nvidia's on-again, off-again sales in China are likely to make it difficult to provide a clear outlook when it reports. Still, options traders are betting the results will have a massive market impact. Plus, President Trump imposing a 50% tariff on Indian goods to punish the country for buying Russian oil. The levies will hit more than 55% of goods shipped to the U.S., which is India's biggest market. The tariffs will also hurt labor-intensive industries like textiles and jewelry. Key exports like electronics and pharmaceuticals are exempt. That spares Apple's massive new factory investments in India, at least for now. And Cracker Barrel making a U-turn. On the back of widespread backlash to the company's brand refresh, the restaurant chain is changing its logo again. The reversal follows a string of share losses in recent days. Even President Trump weighed in on the matter, saying the brand should restore its old logo and apologize. He went on to thank them for changing back to their old look. Let's get a check on stock futures, and the major indexes not doing much this morning as we await those Nvidia results due after the bell. All 3 indexes pretty much trading at the flat line at this point. Again, Nvidia results will come after the bell, and Yahoo Finance will be speaking with CEO Jensen Huang, so make sure to stay tuned for that. But for now, let's dig into our top stories of the day. Nvidia set to report second quarter earnings after the closing bell, and Fed Governor Lisa Cook expected to file a lawsuit today to fight her firing. Plus, 50% tariffs on India are now in effect. Joining me to discuss, tech editor Dan Howley, Fed correspondent Jennifer Schomburger, and Morning Brief Market Sunrise host Ramzan Kamlani, live from our London studios. So Dan, let's start with you. All eyes are on Nvidia. It feels like the market is really treading water until that point. What should investors expect?
Yeah, I think, obviously this is kind of the big referendum on the AI trade every quarter. We get, Microsoft, Google, Meta, they talk about how they're continuing to spend or that they see constraints when it comes to their ability to serve customers because there's more demand than supply available. We start to see AI stocks kind of go up, and then, Nvidia comes out later in the month later in the earnings season, I guess. And then we start to see movement again just because they are the bellwether. So for this quarter, obviously data center going to be top of mind. Let's go over the numbers real quick. We're looking at adjusted earnings per share of $1.01 on revenue of $46.2 billion. Now that would be up from the 68 cents and $30 billion that the company saw in the same quarter last year. That works out to about 49% growth in EPS and 53% growth in revenue, respectively. The thing I want to point out here is those growth numbers are going to be lower than what we had seen in Q2 last year. So I think what's going to happen is some investors are going to say, well, that's not 100-something%, 200-something%, and maybe take pause. But obviously, the law of large numbers. This is a company that's gone from, billions in revenue to tens of billions of dollars in revenue each quarter. So that's just natural that we would see that kind of start to even out a little more. And some of the analysts that I had spoken to say that they think it'll be about 50% is where they start to see growth every quarter moving forward. For data center, we're expecting $31 billion, and we're expected to see $3.8 billion in the gaming segment. That's Nvidia's second largest segment, and kind of where this all started, obviously. But data center is going to be the big kind of part of this. I think the number or percentage of revenue that comes from the hyperscalers is always the most interesting to look at. Last quarter, CFO Colette Kress said it was a little less than 50% of the company's revenue came from hyperscalers. They don't name them exactly, but you can imagine it's the Amazon's, Google's, Microsoft's, Meta's, xAI's, things like that we're looking at. The companies that are purchasing tens of thousands of these chips. And so that's going to be the kind of main to-do for this particular quarter.
And Dan, there is a report from the Financial Times that China chip makers are aiming to triple output of AI chips next year. How much does that overseas competition pressure Nvidia, some of these other domestic AI plays, and do you think that will come up on the earnings call later today?
Oh yeah, for sure, absolutely. I mean, the China part of this equation is going to be incredibly important to shareholders. We had seen President Trump ban the sale of chips in April, then flip that in July. In the interim, during Q1, Nvidia said, looking at Q2, they were expecting to see an $8 billion hit for the quarter. They had taken a $4.5 billion hit in Q1 as a result of all this, tariff back and forth, and then the outright ban. And so now that these sales are going to be restarting, we're looking to see where the revenue from China is coming in. Last year it was 17 billion for the full year, but the Chinese government, the Chinese officials aren't really, sitting back idly. They want to obviously grow their own base of AI chip makers. There are some chips that can rival the H20 chip. That's the chip that Nvidia sells in terms of performance, but they don't have the software that Nvidia has, and that's been kind of Nvidia's, stickiness. Their CUDA software that allows users to take full advantage of the hardware and use it for parallel processing that goes into AI and high performance computing. And so that's going to be a big part of the conversation. The competition there, fierce. The government doesn't want any companies to be overly reliant on U.S. chip makers, and so that's something to keep in mind on.
And while Nvidia is almost guaranteed to move markets, what hasn't so far is the latest Fed drama, but it's still expected to have a long-term impact. And Jen, I want to kick it over to you because Lisa Cook is expected to file a lawsuit today to fight her firing. What does that mean in the near term? Is she still a Fed governor, and what comes next?
That's right, Allie. Lisa Cook's lawyers expected to file a lawsuit today in D.C. federal court fighting the president's firing of her. In the meantime, in view of pending court action, the Fed has deferred a decision on her status. In other words, she still works for the Fed, likely has access to her emails, continuing to be able to work. Whether she actually goes into the Federal Reserve building or not is an open question. And of course, depending on how long this legal battle goes, the bigger question is what happens at the FOMC meeting on September 16th and 17th if we're still in this situation. But this legal battle potentially kicking off today is really going to be a test of presidential power. We know back in May that the Supreme Court moved to protect members of the Federal Reserve Board and the Fed chair from being fired by the president, even as they let members of other boards like the National Labor Relations Board move forward with firings. So it's going to be interesting to see how this plays out. We know that Section 10 of the Federal Reserve Act states that Fed governors will serve 14-year terms unless fired for cause by the president. We know in past legal proceedings that is defined as neglect of duty or malfeasance. So we'll see whether the courts could redefine what for cause means in this situation.
And Jen, Trump has already signaled that he wants to move quickly when it comes to a replacement. What does that mean for Fed independence, and how much could that reshape the balance of the central bank?
That's right, Allie. Even as we are continuing to see or just beginning to see this legal battle play out, the president moving quickly to potentially replace Lisa Cook. He has signaled that perhaps he would place Stephen Miran, who is currently the head of his Council of Economic Advisors, who he had nominated to replace Fed Governor Adriana Kugler, whose seat was vacated earlier this month. Perhaps he could replace Cook because then he would serve a longer term, though he is talking to Treasury Secretary Besson and Commerce Secretary Howard Lutnick about this. As far as the test of Fed independence, everybody is up in arms, talking about how the president is packing the Federal Reserve, and this is throwing into question the independence of the central bank. However, I would just note this. Yes, he's looking for people who have dovish positions right now on monetary policy, but they may not always maintain dovish positions on monetary policy. We know that the president put now Fed Chair Powell in place, and Powell has acted to do what is correct for the economy. So who's to say that the people that he puts in place are not going to do the same thing.
Now, another headline for investors is trade. The U.S. just doubled tariffs on many imports from India to 50%. Ramzan, I know you've been following this closely. How severe could the damage be for Indian exporters, and which industries are most at risk?
Yeah, well, as you mentioned, 55% of all goods that come out of India end up in the US. It's India's biggest market, and it's going to hurt labor-intensive industries like textiles and jewelry the most. And these new tariffs, they also threaten thousands of small exporters and jobs, including in Prime Minister Narendra Modi's home state of Gujarat. And earlier this month, he actually promised to cut taxes to try to mitigate the impact of tariffs. Now, there are also reports that the government is holding talks with exporters to increase shipments of things like textiles and jewelry to other countries. And it's likely also to provide financial assistance to affected businesses. Like key exports like electronics and pharmaceuticals, we know are currently exempt. And Apple's massive new investment, the factory investment in India, for now is exempt as well. Now, we all know that the reason behind this was for this, massive 50% rate. I think Brazil has got a similar rate as well. Well, the massive rate behind it, the reason behind it is that Trump's unhappy with India because it's buying Russian oil, which said is funding Putin's war in Ukraine. Now, many analysts believe that the billions of dollars that India has saved by buying Russian oil, that will all be wiped out by these tariffs. In fact, since the start of the war, it's estimated that India has saved around $17 billion by buying Russian oil. And it accounts now for almost 40% of India's total oil purchases. And guess what? Before the war, that number was almost zero.
And Ramzan, also in focus is the EU. It's fast-tracking legislation to drop tariffs on U.S. industrial goods in exchange for lower duties on European autos. How significant is this, and what does it mean for European businesses?
Well, Ali, this is actually just one part of this agreement at the moment. According to people familiar with the deal, the European Commission, that's the body that handles trade matters for the EU, will also give preferential rates on certain seafood and agricultural goods as well. Now, the EU has conceded that the trade arrangement struck with Trump favours the US, but that the accord, they've got no choice. They have to do this to give business stability and certainty in the European Union. Now, one reason this is also significant is that this move comes even as President Trump has threatened to impose tariffs on countries that tax online services. And we all know that the president has a pretty low opinion of EU tech and antitrust regulation over tech giants like Google parent Alphabet and Apple. So this is very significant for the auto industry. We know the EU cars and auto parts currently face a 27.5% tariff on exports to the US. Even though the US and the EU struck a trade agreement that would see tariffs on nearly all European products drop to 15%, the president did say that wouldn't apply to cars until legislation was proposed to remove industrial and other duties. So if the EU proposes this legislation by the end of the month, then the 15% tariff rate will apply on European cars and will also be backdated back to the 1st of August. Now, cars are one of the European Union's most significant exports to the US. Take Germany on its own. It exports around $35 billion of new cars and parts to the US just last year. And some anonymous sources have actually told Bloomberg that the Commission will actually skip conducting an impact assessment. And that's what they normally would do in these situations because they need to get this proposal moved forward as quickly as possible, but basically by the end of this month.
All right, Dan, Jennifer, Ramzan, thank you so much. Appreciate it. And a programming note, tune into Yahoo Finance today after the market close for full coverage on Nvidia's earnings results and our live sit-down interview with Nvidia CEO Jensen Huang. Cracker Barrel announced it is sticking with its original logo. The decision comes after days of consumer backlash, including a Truth Social post from President Trump over the company's minimalist rebrand. Let's bring in Yahoo Finance reporter Brooke De Palma. So Brooke, what a week for Cracker Barrel. We saw the stock pop last night after the news. How are shares doing this morning?
Allie, shares are moving higher in pre-market trading this morning after the old timer, well, it's back on Cracker Barrel's logo, and it's been quite the week. The company saying in a statement to Yahoo Finance overnight, quote, "We thank our guests for sharing your voices and love for Cracker Barrel." They went on to say that we said we would listen, and we have. Our new logo is going away, and our old timer will remain. Of course, that old timer is that older gentleman that's featured on their logo. But this comes after major backlash. We know that President Trump weighed in immediately right after Cracker Barrel had announced this, saying, quote, "Congratulations, Cracker Barrel, on changing your logo back to what it was. All your fans very much appreciate it. Good luck into the future. Make lots of money. And most importantly, make your customers happy again." But this comes after a week of so much backlash between not only the president, but many consumers who were saying that maybe Cracker Barrel went a bit too far with trying to modernize the brand. This comes after the president called just on Tuesday morning that the Cracker Barrel should go back to the old logo, saying that they should admit a mistake based on customer response, and that they got billions of dollars worth of free publicity if they play the cards right. Now, keep in mind, once again, this happened after Cracker Barrel just announced this more minimalistic logo, just focusing on the colors and not featuring that old timer on August 19th. And over the past 10 days, it's been quite the run for Cracker Barrel. Keep in mind, over the past 10 days, the stock is down more than 3.5%. But this comes as the CEO, Julie Masino, has told Yahoo Finance that they're on this 3-year transformation plan that's currently underway as they really try to reach consumers yet again after we see a fall off of foot traffic.
Brooke, thanks so much. Coming up, we count you down to the opening bell on Wall Street. Don't go anywhere. You're watching Morning Brief on Yahoo Finance. Now time for some of today's trending tickers. We're watching MongoDB, Okta, and Kohl's. First up, MongoDB. The software company soaring today after it reported second quarter results that were much stronger than expected. Citi analysts saying this was a blowout report and one of the strongest top and bottom line beats in years. Next, Okta, yet another software company with strong results. Second quarter earnings beat expectations and the company raised its full year outlook. Analysts at RBC noting that Okta delivered a solid quarter that was up against negative investor expectations. The results outperforming on all metrics with a highlight on its subscription revenue growth. Finally, Kohl's, the troubled retailer, posting an optimistic full-year sales outlook. The forecast serving as a positive sign that its turnaround efforts are gaining traction. The company now expects comparable sales to be down no more than 5% this year, less than its prior forecast for a decline of as much as 6%. The company also reported second quarter sales that were better than Wall Street estimates. You can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, stock futures flat as investors' attention turns to Nvidia earnings out after the market closed today. It's expected to be a major bellwether for AI enthusiasm. The earnings come amid a flurry of headlines from President Trump's pressure on the Federal Reserve. The Fed said it would abide by a court's ruling to determine whether President Trump has the authority to fire Fed Governor Lisa Cook. With more on what this uncertainty means for markets, let's bring in Lizanne Saunders, Charles Schwab Chief Investment Strategist. So Lizanne, let's start there with the Fed. We get PCE later this week, but the headlines very much focused on the Trump-Lisa Cook standoff. How do you weigh the economic data against this political backdrop when it comes to Fed independence and the outlook for rates?
So I think that if we get another jobs report that's akin to what we saw last month, so weak at the headline level, but significant revisions on the downside, I think that cements the case for the Fed moving in September, which nobody wants a weak labor market, but it might alleviate some of the concern about threats to Fed independence. I think very different story if we see a relatively strong labor market report. We already know that inflation has not come down to the Fed's target. Were the Fed to move then, you might see a little bit more concern expressed not just by investors or Fed watchers, but maybe by markets themselves, in particular the bond market.
Right. There's been debate about the trajectory for inflation, and PCE is expected to show firmer prices. Now, Jackson Hole markets really took Powell's tone as more dovish, but do you think it was an overestimation to think that September cut, it's a done deal? How did you interpret Powell's language?
So I think it was an apt description to call the speech dovish, but really only if you're talking about what he was or wasn't going to telegraph about the September meeting. And there was essentially telegraphing that that's their bias to ease, maintaining, though, this framework of data dependency. I think where you could argue maybe was less dovish was the change to the Fed's framework. And that was actually the stated topic that the Fed was addressing, and Powell was in the speech, was that change to the framework, specifically the flexible average inflation targeting, which they put in place a number of years ago, which was essentially the allowance for Fed to run hot, such that over time you average to the 2%. They now concede that was probably not the right move. It was essentially the reason why the Fed was late in starting to raise rates in the aftermath of the spike in inflation in 2022. So the removal of that, you could argue, maybe veered a little bit more hawkish. So you could find something for everybody on the dovish to hawkish spectrum.
And how would markets react if the Fed doesn't cut in September, especially the pockets that have rallied most on that expectation, like small caps? Will that be the end of this rotation story that we've been seeing?
I think it's not so much what the Fed does, but the why behind it. If the Fed were to not move because of much stronger economic growth, or reacceleration in growth, and an improvement in the labor market, obviously that's not a bad macro backdrop. That said, to your point, I think the lift that we have seen down the cap spectrum, the broadening out, the fact that small caps, whether it's the Russell 2000 or the S&P 600, have handily outperformed on a quarter-to-date basis. And I think the prospects for rate cuts are absolutely a component of that. So you might lose a little bit of that down the cap spectrum luster, regardless of the economic backdrop, if the Fed has to back away from rate cuts.
Now, speaking of market rotation, retail traders have been a big part of this rally, and we've seen those fingerprints and memes, heavily shorted names, non-profitable tech. How do you view the sustainability of that retail playbook heading into year end?
Well, so that retail trader cohort has become incredibly important as a driver of market gains. They represent typically 20 to 25% of trading volume on a day-to-day basis. So, and they have very much that buy the dip mentality, that typical veering into the lower quality names. You pointed some of those baskets out, like the meme stocks, non-profitable areas, heavily shorted stocks. I think the heavily shorted stocks thing is akin to when the meme craze first developed a few years ago. It was a little bit of that let's stick it to the man, sort of forced short covering on the part of institutions that are short these stocks. For your traditional individual investor, I'd say be careful about leaning too heavily into that low quality trade. There are plenty of other places to do well in the market that are up the quality spectrum. So we continue to say, to use trader lingo, fade the low quality, lean into higher quality.
All right, fade the low quality. Lizanne Saunders, thank you so much. Appreciate your insights today.
My pleasure. Thanks.
Well, coming up on Yahoo Finance, opening bid, our own executive editor, Brian Sazi, joins us now. Brian, what can you tease for us today?
Well, Allie, I'm really excited about talking Nvidia earnings. We'll keep that conversation going. But out of everything I'm going to do this week, it's the analysis we have coming on Cracker Barrel that has me really fired up and maybe a little hungry.
Me too, Saz. I think we need to get some Cracker Barrel breakfast in here to celebrate the return of the OG logo.
Yeah, we all love 2,000-calorie breakfasts.
100%, 100%. But that does it for Morning Brief. Much more ahead on Yahoo Finance.